Massachusetts and Rhode Island, and through education, outreach, and advocacy. Um, I want to introduce to you today our speaker, Morgan Eldridge. She's a dedicated certified community health worker and health connector navigator with a deep commitment to supporting the health and well-being of fishing families. Growing up in a fishing family on Cape Cod, Morgan's roots in the local community have profoundly shaped her career. For over 10 years, she's worked with fishing partnership support services, immersing herself in the complexities of the healthcare system, becoming a trusted advocate for her community. So I'm really excited to have Morgan here today. She's got so much knowledge in this. So at this time, I'm gonna pass it over to Morgan.
Great. Thank you so much, Susan. Thank you for inviting Fishing Partnership to present today. Um, this topic is challenging and complex, and hopefully I have broken it down well enough for you all to understand. And of course, I'm happy to answer any questions either along the way or at the end. We'll do our best. Oh, okay. So Fishing Partnership is a Massachusetts-based nonprofit. We aim to improve the health, safety, and economic security of commercial fishermen, their families, and their communities. We have 4 port offices in Massachusetts. There's one in Gloucester, New Bedford, Plymouth, and in Chatham. We are certified Health Connector navigators. What a navigator is, we're trained at the highest level by Massachusetts and the Health Connector and Mass Health to help people navigate the complexities of the healthcare system and enroll in plans. We can help with troubleshooting common health connector challenges, which can be verification document submissions, missed enrollment deadlines, billing, payment issues, and various application questions like income. Being a navigator allows us to help people without them being present or on the phone. A simple form, a navigator designation form, allows us to make changes on your behalf. And this is convenient for people like yourselves that are typically busy when it's time to make updates to your application. So the Massachusetts Health Connector is the state's marketplace for all health plans that meet minimal essential coverage. It's basically your one-stop shop for comparing plans in one place. So you can go to a carrier and you can purchase a plan. You can call around to different carriers and compare them yourself. This is the place that you can go directly to compare them side by side and make an informed decision with less of a headache, we hope. Um, and it is the only way to apply and receive subsidies. So you can only get the financial help through the applying through the Massachusetts Health Connector. So anyone can apply for coverage on the Health Connector, and depending on several factors, you may qualify for financial help, which includes lower cost premiums and some cost sharing reductions. So regardless of what you're eligible for, you're still able to enroll in a plan that works for you and your family. So whether you qualify for subsidies or not, these plans are available for you to enroll in. So there are several programs on the Health Connector that you could be eligible for. There's Health Connector plans without the federal subsidy, which is advanced premium tax credits. This means that there's no help available, no financial help because your income is too high. Or you can purchase a Health Connector plan with some federal subsidies, which means that you'll get help lowering your monthly premium, but you'll be responsible for the deductible portion of that. And then the next program is called the Connector Care Program. And this is where the federal and the state come together and offer help in one program. So you're receiving help lowering your monthly premium amount, and the state is paying for your deductible. So you have zero cost on your deductible and lower cost premium amounts. And the last program is the state's Medicaid program. This is Mass Health. Mass Health is zero cost to you or minimal cost for prescription coverages, usually about like $1 to $3 for a prescription. And the Medicaid is for low income or zero income families or individuals. So I mentioned briefly about the advanced premium tax credits. I'm going to explain that a little bit because this is where kind of this is all going to flow. Advanced premium tax credits are an amount of money that's determined by the federal government to lower your monthly premium. So in order to qualify for advanced premium tax credits, you must apply for a subsidized health plan through the marketplace, be a tax filer, and if you're married, you must file a joint tax return. And the eligibility is determined by your household size and income. So basically, the lower your income, the more help you get. The higher your income, the less help you get. And APTCs are reconcilable. So that means if you've received any APTCs to help lower your monthly premium, you must reconcile the help you received on your federal income tax return. You'll receive a form from the Health Connector at the end of the year that you will use to fill out your IRS form 8962 and file it with your return. If this isn't done, you do risk losing the eligibility for APTCs in the future. This form is well known by your accountants. If you have an accountant, they do know that to file this if you hand over that form from the Health Connector. All right, so the Connector Care program, Susan's going to share an entire program overview for you, but I'll just explain a little bit about what that is. So the Connector Care program, like I said, you're receiving help in two ways. You're getting the advanced premium tax credits to help lower your monthly premium, and you're also getting the help from the state as a $0 deductible. So these plans have low monthly premiums, low copays, and no deductible, and diabetes. And all the plan types. So when you're eligible for Connector Care, there are different plan types, but depending on what your income is and where you fall. All the plans on each plan type have the same benefits. So what that means is if you're the plans that are offered to you under a certain plan type are either going to be a low cost to a high cost. So the lowest cost plan being $0 to $264, depending on which plan you choose. And a lot of people ask, well, if the benefits are the same, then why would I go with the more expensive plan? And the answer to that question really boils down to your doctors. So you're always going to take the plan that your primary care accepts. But if you have specialists and certain specialists don't take the lowest cost plan, then you're going to have to go to the next plan or the next plan, depending on how negotiable those doctors are to you. So that's another part to consider is if you're worried about the cost of your health plan, you want to look at the doctors you have. So if you have a doctor, maybe you see once every 2 years, is it worth paying $1,000 a month for a health plan just so that you can see that doctor once every 2 years? So you can see the income guidelines for the program eligibility. So the income limits have been increased through the Connector Care program expansion until 2026. So that means more individuals and families earning more money or earning up to 500% of the federal poverty level are eligible for this program. So you can see the breakdown here that an individual earning $75,300 a year can qualify for this program, and it'll go up from there. So the larger your house, the more money you can make to be eligible for this program. This is just showing you a little bit of a breakdown of the cost sharing for the Connector Care program. So when you're eligible, the benefits, the copays that you're required to pay at the time of service range from $0 to, say, $100 at the emergency room, which is not very much compared to some of the commercial plans that are available right from the carrier. And this is going to be shared with you as well, so you will be able to look at that a little more detail. And then we're going to talk briefly about Mass Health. Mass Health is the state's Medicaid program. There are several types of programs within Mass Health. You can become eligible for Mass Health for various reasons. It could be income, a loss of income, it could be a medical need, maybe a disability. You might have a child that might need extra services. It could be DTA. You might be pregnant. It could be a variety of reasons. You can become eligible for Mass Health at any time throughout the year. And Mass Health is meant to be a short-term coverage for people that are in transition. So if you're, say, you're in a season where you're not um, I might say catch or I would guess we would, when I'm talking to fishermen, we're saying catch something. So I apologize if it's not that relatable. But if you're in a season where you're not working as much, you can transition from Mass Health into another program when you're in your busy season. So you can go back and forth between different programs throughout the year, depending on what's going on with your business, with you, and it's simple to do with the help of a navigator, or if you're willing to do it on your own, you're welcome to. Okay, so we talked about the programs briefly, and we can go into more detail if anybody wishes. Now I'm going to talk about income sources, projected income a little bit. So how do you become eligible for these programs? So I'm giving you a complete list here of all of the income sources that need to be reported on your health insurance application. So when people are filling out their application, many times when you talk about, okay, do you have any income? Most people are thinking, well, yes, I have a job. Not many times we come across people that forget that maybe they have investment income, or they collect unemployment at certain times of the year. All of these things are considered income and do need to be included somewhere on your application, depending on what time of year it is and when you're taking this money. And again, this is another conversation you can have with a navigator. And now we'll talk about how to project uncertain income. So this system was not designed well for farmers, fishermen, independent workers, seasonal workers. It's challenging really to get a good sense of income when you're talking about the past, the present, and the future. And it's all at the same time. So the Health Connector determines your eligibility based on your modified adjusted gross income. The information that they have is from your past tax filing season. The information they're asking you to fill out is for the current year or the future year. So Right now we're in open enrollment, so they're asking you to project your 2025 income. That's not the easiest thing to do when there are so many factors that are out of your control. So I just want to give you a few tips on how you can get a good sense of what that income's gonna look like if you're uncertain. And of course, it'll give you information on how to contact one of our navigators. But a navigator is extremely helpful in these scenarios, in these situations. Our navigators have worked a really long time to talk through situations, to really get a good sense of what people need to, or what the questions are to ask to get to the answer you need for that application. So, number one is, if you want to do this on your own or as you're prepping for a meeting with a navigator, you'll want to look at the last 3 to 6 months of your expenses. And if you're keeping good records of income and expenses, that's great, because you're ahead of a lot of people. Not many have that currently done, so that can be challenging. But if you're doing that, something to consider is, what time of year are you in? Are we in your busy season? If not, how do you account for the months that you're making a lot less or you're not making anything? You can take an average of your last few years' tax returns and use that if that feels comfortable to you. And some people are perfectly comfortable just using their past return, because it doesn't change much. And if it does, they're prepared for that, at the end. And if you're um, self-employed, you want, or LLC, you do want to look at your net income. That's the income you're using. So it's after all of your expenses. If you are a W-2 employee, you are looking at your gross income. So there's not much you can do there, but I'm going to talk a little bit about some things that you can do as we get further along. And then, are you, do you have a plan to make any major purchases or sales in 2025? That's something to consider. Are you selling a house? That's usually one of the biggest things that people forget about or didn't plan for, because the sale of that house is considered income. And depending, and then you want to aim to have your income projected between or within 20% of what it actually ends up being. So there is a 20% margin of error, where your income can fall. So if you end up within that on your tax filing, you should be okay. And then, as always, these, putting a reminder in. So subsidized health insurance is work. It does require you to do a little more than just, purchasing a plan from a carrier. So putting in a reminder in your calendar to check in every few months, every 6 months, just to update that application to be sure you're on track, especially if you are making more money. Because really our goal is to not give any money back to the federal government if we don't have. I can pause here if there's any questions, if you wanted to, if there's anything about income that people have. Okay. So we talked about, oh, go ahead.
No,
Sorry.
I was just going to say, also feel free to drop questions in the chat. We also have some of Morgan's fishing partnership coworkers here that can also answer things in the chat.
Thanks, guys. Um, so the advanced premium tax credits that help lower your monthly premium, I mentioned that is, something you need to reconcile. So here's some ways that you can avoid having to pay any of that back when you file your return. One, you can adjust the amount that's applied to your monthly premium. You are not required to use all of the help that you're receiving. So before you enroll in your plan, you have the option to change the amount of tax credits you take and can adjust your premium to an amount that you're comfortable paying each month. So when you do file your taxes, and if you're a little bit over, but you've adjusted the tax credit amount, you're probably not going to, you might be a little bit closer to where you need to be, and you may not have to pay back as much. You can also over project your income in your application. So if you're having difficulty really figuring out that number and you're able to pay a little bit more monthly, you can project your income on at a higher amount, especially if you're seasonal or self-employed. Sometimes that helps a little bit because when you go to file your taxes and if you've over projected that income, you will get some money back. So it does go both ways. You over project your income, you'll get money back. If you under project your income, you might have to pay some back. And then the third thing is you want to update your income as frequent, I mean, your income on your application as frequently as possible. So, like I said, your application can be changed at any time, and maintaining that accuracy is really going to help you avoid paying back those tax credits. So, if you find yourself at the end of the year having some extra earnings, one of the ways in, that you can plan for your future and um, keep that money in your pocket, well, plan for your future and to keep that money for the future is contributing to a simplified employee plan. So this plan, a SEP is basically a simple method to save for your retirement. It's a way for you to take any of your additional earnings that you may not have expected and put it away for the future. And how this relates to your health insurance is many times people that are have their own business will tend to make a big purchase at the end of the year to spend down some of that income they've earned, but this doesn't always help you out personally, and it doesn't really help you out in your retirement. So by putting money into this SEP, you're able to save for the future for you and your family. And it's also so when you this money put into a SEP is also considered a deduction on your tax return and on your health insurance application. So by putting that money into the SEP, you're also bringing that income amount down closer to where your application income might be, so that you're matching both your income on your tax return and your application income. And I would definitely suggest, as I am not uh, an expert on STEP, I think that's going to continue in the future workshops on this conversation, but I highly suggest working with an accountant on that and or a banking institution to set something like that up. So your health insurance premium can be a pretty large bill. And many people actually have to pay, it's either around the cost of their mortgage, sometimes even more. Um, there's a few ways that you can leverage some of the benefits that you have. If you're paying for this already, you're paying for your insurance already, you might as well get what you can out of it. So, the Connector Care program, as a member of the Connector Care program, there is something called the Card to Culture. This is a partnership with the Mass Cultural Council that offers admissions to various museums, zoos, wildlife sanctuaries at a free or deeply discounted admission cost. And there are over 400 of these institutions all around the state that are partnered with the Card to Culture program. And all you need to do in order to receive that discount is to present your health insurance card at the time of purchasing the tickets, and that discount will be applied. There's a lot more information on the Card to Culture program, either on the Mass Cultural Council website or the Health Connectors website. And you can find a full list of all those organizations. There's a really big list. Another thing that people don't often take advantage of is the extras or savings in their health insurance plan. So, most insurance carriers offer extra savings to members. Most people don't take advantage of these. So, you're paying for it, use it. The best way to kind of locate those benefits, see what extras you have, is by going to your carrier website um, and searching for extras or savings. What I've done is on my carrier, I created an account on their website. And by doing that, there's more tailored savings that's associated with my plan. I've seen savings on things like sneakers, meal kit programs, nutrition, acupuncture, um, massages, things that maybe you are already purchasing, but this will help save a little money on them. And then the third one is a health savings account. So some of the plans on the Health Connector, and these are for people that are eligible for Health Connector plans with tax credits. So you'll still have the deductible portion that you're responsible for. So some of these plans on the Health Connector are HSA compatible. Usually they're high deductible plans. So a health savings account, which um, is a way for individuals to put aside money pre-tax for future healthcare costs, such as deductibles, co-pays, co-insurance, some dental, some vision. And an HSA also follows you through your retirement. So you'll be able to roll over the money that you're putting in there year after year through your retirement, through your, after you've retired or even beyond. And you have to stop contributing to it at age 65, but after you can still draw from it. You can draw from an HSA for non-medical costs, but if you're under 65 and you do that, that is subject to a 20% tax. But you can draw from it after 65 with no penalty there. So here are some helpful links, which I'm going to share the slides with Susan. She's going to share with you all. These are places that you can go to find some more information. Um, if you're just looking to get an idea of what the cost of your plan might be without actually applying, you can go on the Health Connectors, get an estimate tool, and just plug in your zip code, how many people are in your family, their ages, and it'll pull up all the plans that are offered, plus what you could be eligible for based on the income you've entered. Um, there is a link for the business Health Connector business site. Some businesses are able to purchase plans through the Health Connector and offer it to their employees. If you have up to 50 employees, you can get some extra benefits for that. It doesn't always work out for people with small business, only because, or for what I've seen, only because a lot of times their employees qualify for a lot more help that's available through the Health Connector as an individual. So it doesn't always work out cost wise, but it's worth looking into. And then there is a plan finder tool on there. So you can search your doctors and prescriptions prior to applying and get an idea of what plans you'll be looking at. And then you can do a little research on those plan websites to see what one might work best for you. And this is just a reminder, we're still in open enrollment until January 23rd. That doesn't mean things end there. Um, and you can apply at any time throughout the year. If your situation has changed, you may still be eligible to enroll in healthcare. Um, there's some information on that flyer about our port offices, and that little QR code, if you scan that, that'll take you to our request for services on our website. You can fill out a form and one of our navigators will be in touch. Thank you guys. So I'm happy to take any questions.
I just want to say, well, thank you very much, Morgan. That was really great. And if you do, I think Morgan can answer a lot of questions, but we just re want to remind you not to share any personal information. So she can answer generalized questions, and you can also, you know, set up a time to talk to a navigator if you need to involve more personal information. But
Hmm.
yeah. Anything you want to ask Morgan? You can raise your hand, you can just unmute and go for it. You can put it in the chat.
Just gonna tell Mark. Mark, there was a question about business in the chat. I just answered, but you might want to elaborate a little bit on that if you want to put they're just asking if we have navigators for the
Oh,
business
so
part.
yeah, no, yeah, and Maria answered it correctly. Health Connector does have a business side. Brokers are usually the ones that are going to deal with business through the Health Connector.
I
Do
have
you
a
have any?
question. Can you hear me?
Yeah.
Um, is there any problem with just undershooting your income if you are okay paying back the advanced tax credit at the end of the year? Because
Mm,
in the past, when I've like overestimated our income, then I've not qualified for connector care and I've ended up with like really expensive health insurance.
mm-hmm.
I'd rather just like sort of lowball my
Yeah.
estimate within reason, and then qualify for connector care because it's not like I would have to pay back my copays or the actual expenses that I'm using
Mm-hmm.
um, to access that health insurance, and then just pay back the premium tax credit. Is there any issue with doing that?
No, no, we talk to a lot of people who are perfectly fine reconciling those tax credits at the end of the year. There really is nothing wrong with doing that as long as you're prepared to do that and understand what that means. Then I've that's worked out for many people for sure.
Thanks. And I just had one more question. I missed the very beginning, so maybe you already said this, but is there a farming partnership navigator, or is it just a fishing one?
So as navigators, we're actually contracted as navigators with the Health Connector and Mass Health, and we do help the entire community. We just happen to work for well, no, so it's the other way around, but we work for Fishing Partnership and we've applied for that grant. So we do help everyone in the community with health insurance. I do not believe that any farm organizations have navigators that I know of, but you can certainly get our help. We can help you.
Cool. Thank you.
Mhm.
Yeah, and just to add to that, I don't know of any farming navigators. Maybe I'm wrong, but that is one reason why when we found the fishing partnership that we were so excited because when we started talking about the issues that farmers and fishermen face, we realized that they are so when you know just look at the income issues and variability, they're so similar. You have year to year differences, you have seasonal differences, it's dependent on the weather. So their knowledge in this is so valuable to farmers.
Yeah, and it's really situational, so it's hard to get down to the nitty-gritty in this presentation because it really does require a conversation to ask the right questions, to really talk about your own scenario. in order for us to really help you well. This presentation was pretty general, so it is hard um, to really get there right on this meeting, but we can help you. You can just reach out to any of those offices or through our website.
We do have a question in the chat from Stacy. Stacy, do you want me to just read it or do you want to ask it?
Yeah, sure. I was just wondering, and I have background knowledge because I've had great conversations with you all before, but I'm wondering about different strategies that farmers can employ when it comes to moving that potential income that can go over the limits they've set because you hear a lot of people they'll just make a big purchase
Mhm.
to try to move that funding around and similar to that program you were talking about if there's other ways to um, just try to move that income around.
Other than the SEP,
Yeah.
um, Maria, Deb, have you guys heard of any other ways that people have been able to do that? I mean, aside from putting it back into the business, because a lot, a lot of what we see is either or. I haven't been, I don't think I've seen many other types of ways to leverage that.
I mean, the only other, option fishermen have asked for is the HSA plan.
Yeah,
That's just another, been the other option that they've been interested, or that I'm aware of.
yeah.
Yeah.
I
And
mean,
I
that is a way to put that away, but it's not, it's still taxed if you pull it out.
and we also have our partners on the other talks that
Hmm.
are coming up. So our Gather Wealth partners and our Project Bread partners. I don't know if you have some answers to that, ways that you can basically change your net income to be lower without just putting it in a SEP or buying capital purchases.
I guess, I mean, Morgan, I don't know. Maybe this is something for the next series where you're going to have accountants and stuff in there, but depending on how they have their business set up, if they're employees of their business or if they're just, drawing from it, sometimes that changes their income. So I don't know. Basically, what the business makes and what the person makes might be different, and there's a way to look at that too. So that would be kind of something to talk to the accountant about and what the best way to set up your business would be. If that makes sense. I don't know if I made that, if I said that clearly, but because some of our fishermen are corporations, some of them are not. So that's a little bit of a difference too. So self-employment kind of is a different way to do that income kind of reporting.
I
Sean, I see
actually
you're
have a
unmuted.
question.
Okay.
Are most farmers self-employed?
Uh, it is variable. Um, some are so you have some farmers who are a W-2 working on someone else's farm. You have some farmers that are sole proprietorship, some that are corporation, some that are an LLC. So it really is a mixed. It's a little more mixed than fishing.
Actually, that sounds right for me, especially in the Port of New Bedford. There's like
Okay.
sole proprietors, there are those W-2 workers. So yeah, there's different ways to approach those when you're doing the application.
Sean, I see you're unmuted. Did you want to jump
Yeah,
in?
sure. I would just add that to the question about reducing income for the sake of the credits. So the SEP does allow for a $70,000 contribution in 2025. So it's a significant sum of money, and the HSA functions as indicated similarly. So when you combine those two things to an HSA, you can put at present $8,300 away for a family. When you combine these two things, I should stipulate the 70,000 is not the amount of money that everybody can contribute to a SEP. It's either 70,000 or the lower of 70,000 or 25% of earned income. Having said that, you can reduce income pretty substantially with just those two savings vehicles. And then perhaps a conversation for another day. The distinction between the employer's deductions and the employee's deductions. There is potentially additional opportunity with a 401k in terms of both parties reducing their income. 401ks allow for profit sharing, salary deferral, and matching. So in there's likely some opportunities for individuals and employers.
And if you are a farm owner with employees and you put money into a SEP, do you also have to offer that to your employees?
You do. So and it's based on the salaries these individuals command. So it's a percentage of of the income they're deriving from working for that business. That's stipulated by ERISA, but which is simply a law that dictates that there can be no disparity in the treatment of the individuals who are receiving that benefit. Um, and then there are more, there are options outside of that for businesses that have a lot of free cash flow. But I don't know that we need to expound on that. So yes is the straightforward answer to that question, Susan.
Thank you. And that's Sean with Gather Wealth, and he'll be
Sorry.
giving the talk on January 22nd. Thank you.
So this is Jeff Cole from the Care Project. Sean, I have a question. A 401ks only if it's for an incorporated business, or can a sole proprietor set up a similar pension plan?
Not to split hairs, it's not actually a pension plan, but yes, an individual, a sole proprietorship can set up what is called a solo 401k.
Okay.
And basically the benefit, I'm sorry, go ahead.
No, well, are they also then impacted by, if they have employees, that they have to equally?
Yeah, the distinction between the two really comes down to the catch-up, which is allowed at present through the 401k and is not available through the SEP. So individuals over the age of 50 can contribute more to their 401k through salary deferral. But beyond that, the SEP is simpler. The SEP is less expensive. Filing requirements are fewer. So generally, the SEP is going to be the right choice. Having said that, there was a recent enhancement, I guess, made to SEPs, which allow for Roth contributions, SEP Roths, where before that was the exclusive, a benefit exclusive to the 401k plan. Not to confuse the issue, Roths don't allow for a deduction, so it doesn't it's not maybe compatible with this effort to reduce income, but there are benefits we can speak to around Roths as well.
Thank you, both Jeff and Sean. And I'd like to note Tracy in the chat said that I know some fishermen who pay their children and family members as employees up to the limit, which changes each year. It was $14,000 in 2024 to save on taxes.
Yeah, good point.
And this is, go ahead, Jeff.
So there's one thing that I'll mention next week, but I might as well mention it now. Farmers and fishermen are two entities, and as far as I'm aware, the only two entities that the IRS allows for additional Social Security payments. and it's a formula, right? You can't just say, oh, I want to put $100,000 in Social Security. It's formulaic based upon actual income. But it's something that frequently the farmers we work with aren't aware of, don't take advantage of. We haven't done a lot of work with it, so I can't give you any kind of specific numbers around the advantages of it. I don't know, Sean, if you have any, comments on it, but theoretically, you can pay more than the standard contribution if you're a farmer or fisherman because of the understanding that there are years you don't make any money, and you're trying to increase your years of participation for qualification as well as your average for for when you retire.
Now, and this may be beyond the scope, Jeff, of this conversation, but does that equate to a higher benefit, or are you just trying to meet that minimum standard, which is substantial income in any given year through these additional payments to?
My understanding is both. It definitely meets the minimum quarters, right? It's
Okay.
a tool for minimum quarters, but since my assumption is since your total benefit at the end is a compilation of all your years of contribution and that dollar
Yeah.
amount, the more you put in, theoretically, the more you get out.
Yeah, and again, not to dwell on this over much, but the Social Security in particular is well, there's much that could be said about Social Security, but in particular, the inflation hedge it provides, Social Security is adjusted, and maybe most of this audience knew this, but at present, Social Security is adjusted annually for inflation. So that's a fantastic benefit and a great opportunity if Social Security doesn't change and you have the wherewithal to do that. That's great. Thanks, Jeff.
So I've just dropped in the chat. So Sean, again, Sean's with Gather Wealth. He'll be giving a talk on the 22nd, and Jeff is with the Carrot Project and will be giving a talk in this series on the 15th. So we find, income and healthcare, these are all related issues that farmers are struggling with. And so, we envision these as a connected group of talks. But any other healthcare questions, or healthcare as it dovetails with finances? Morgan and Fishing Partnership Group, do you have any suggestions with, I know you're on the individual side, but the business side, how you pick someone to work with when it comes to like trying to find, one of the insurance people
Okay.
that you can choose on the business side?
Yeah, I'm not really sure. You need to have there's a list of brokers on the Health Connector website. I'm not familiar with any of them. I know that as brokers, they do charge for their services, and they can. I'm not, so picking someone specifically to work with, I'm not familiar with that. Or I wouldn't be able to refer anybody. But I will say the Health Connector does offer business webinars that are free. And I think if you're going into a meeting with a broker well informed, you'll feel a lot more comfortable working with that person.
And then just to clarify, your service at Fishing Partnership as navigators is free to everybody?
That's correct, yes. Yep.
Any other questions? I do want to also put a plug in for our conference. So I'm going to put the website in the chat. So the CMAP, along with 8 other partners, puts on the Southeast New England Agricultural Conference and Trade Show, which is February 2nd at Bristol Aggie. Both Gather Wealth and the Carrot Project are offering free one-on-one coaching sessions during the conference, which is pretty amazing. And they'll also be tabling, and possibly we're still working with, you guys have another conference, but possibly someone will from Fishing Partnership will be there as well. At least tabling, possibly.
Possibly.
Yeah,
We're spread everywhere for that weekend, but
yeah.
we'll see if anyone is available.
But you can go to that link, the sneacs.org, and on that front page is a link to signing up for those one-on-one coaching sessions with Gather Wealth and the Carrot Project. So unless there's any other questions, I want to say thank you again to Morgan and the Fishing Partnership. You guys are a wealth of knowledge, and we appreciate that you're available to the farming community.
Yeah, thank you for having us.
It's been great.
Yeah.
Any last questions?
Well, Susan, I'll do the last pitch because we're also working on a follow-up workshop. I mean, literally follow-up to these series, but for the conference as well.
Yes.
In an hour, we can only get so far. And even if we have 90 minutes, we'll only get so far. But we'll, be able to get into a little bit more detail on some of the stuff we're working on at the conference.
Yeah, and it's going to be scenario planning, right? So sort of walking through people, actual scenarios of what it looks like.
Yeah, following up on the process of putting together financial numbers to understand what your options are. I mean, it applies to this concept of, okay, I got money. If I want to maintain a certain level of a subsidy, I have to get under a certain level of income. But knowing if that's coming up or not, that's called scenario planning. Yeah.
Thank you for plugging that. So we'll have a follow-up email that will have a brief little survey. It will have a link to the recording to this, and it will include the slides, and you should see that coming in by Monday. So again, thank you everyone for attending. Thank you, Morgan and Fishing Partnership, and thank you, Matt and Sean and Jeff, for your participation as well.
Thank you so much.
Thank you all.
All right. Have a great day.